Week ahead, non-farm payrolls and Fed minutes to kickstart the new year as US dollar continues to get weaker. Markets will slowly begin to return to normal in the first trading week of 2023, with a number of top-tier releases on the way to liven things up after the holiday lull. The latest US jobs report will be headlining the economic agenda, while the minutes of the December FOMC meeting is expected to attract more attention than usual, given the absence of Fed speakers since the event. Flash inflation readings out of the Eurozone and Canadian employment figures will be other highlights as well. Um, let's look how the US dollar basket looked like when the US inflation rate peaked. And you are looking at the weekly chart, and it's the US dollar basket. And we can see a very long uptrend here for many, many weeks. Each of these candlesticks bars represents 1 week. And now we had seen a 14-week downtrend. And this is the current week now at level 10,317 points mark. And why I'm showing you this is because it's very important when you're trading currency pairs, knowing what kind of climate we are in. Are the market participants willing to take risks? Are they very positive when it comes to choose assets, depending how the global economy looks like? Or is it the opposite? Will most market participants and investors seek secure investments assets when it comes to currencies if they choose to buy a US dollar? As you know, the US dollar is a safe haven currency. And when we can see an increased inflation rate in the US, we will also see that the US dollar gets stronger. Now we have seen the opposite case. For a couple of weeks, we have seen we have a risk-on mentality. The inflation rate in the US have decreased, as you can see here on this chart, Statista. And we can see the inflation rate in the United States here. And from this peak in June 2022, the inflation rate in the US was 9.1%. And since that summer in June, the inflation rate decreased. So the latest number now in November 2022 is 7.1%. That's the reason being why, for example, risk on currency pairs like euro versus Canadian dollar have risen. The euro has risen stronger relative to Canadian dollar. Also, the Kiwi dollar have also get a lot of strength relative to Canadian dollar because the risk is on. The market participants saw that when the inflation rate went down, as you can see here, they start to buy the EURCAD and the Kiwi CAD currency pairs. And it's very interesting to see that if we look at, I will shift over and show you the euro versus the Canadian dollar pair. Here we have it. Let me show you in daily chart. So here we can see the daily chart of euro versus Canadian dollar up here. Um, Interesting to see that. Let me show you the weekly chart instead. I think I can show you my point in a better point of view here. Look here. We can see here that this week was extremely bullish. It was a massive bullish candlestick bar here this week when it comes to EURCAD pair. And the date was in the end of September, beginning of October this year. And you can see, if I show you this inflation rate, that here in September, the inflation rate was 8.2%. Sorry, here you can see 8.2%. And then in October, you can see here that the inflation rate decreased to 7.7. So that minor decreased really made market participants to buy here. And that's the reason being why you can see this strong bullish close here for the euro. So when the inflation rate decreased, we can see the market participants went long in this pair and they started to buy. Therefore, we can see this very massive bullish uptrend here. And when you can see here in November, the latest release of the US inflation rate, when it decreased to 7.1%, which is of course positive for the economy in the whole, in the States and the rest of the world. That's the reason why this Euro Canadian pair doesn't go up any further. Let's have a look on the Kiwi dollar versus Canadian dollar pair. Same story there as well. You can see here, this is the weekly chart, and this is October year 2022. And just between here, the end of September and the beginning of October, we can see the Kiwi just exploded on the upside here for many, many weeks, almost vertical here. It's in line with the US inflation rate. As you can see here, October on the bottom. So when the inflation rate had decreased for many months down here, the market participants and large financial institutions, they really got very positive and wanted to invest in risk-on assets, currencies like the euro and the Kiwi dollar. So they were positive to see when the inflation rate went down, they wanted to invest in risky assets as the Kiwi dollar here. So that's the reason being why you see this uptrend. And also the same story comes to the Euro Canadian dollar here, the same here. So when should you go short, speculating for a downtrend when it comes to the Euro Canadian dollar and the Kiwi dollar versus Canadian dollar pair? Well, let's begin. Look at this weekly chart, and I can show you a trick how to spot a very accurate supply zone. I mark in this wick. This is the weekly chart. You can see 3 candlesticks bars here, which is 3 weeks. This is this week. And you can see the tail here on the upside, this wick here. I mark that out and do like this. So this gray rectangular horizontal box, that's the supply zone. So if I let me enhance it, this graph, so you can easier spot it. So you can see the price went up here with a little wick on the top, this nose, into this supply zone. So now we can see the price stopped here for today. So this is a very good selling opportunity to go short when it comes to the Euro-Canadian pair. Let me show you how it looks like on the daily chart. Here you can see this rectangular box here. That was what I drawn from the weekly chart. And this is the daily chart. So you can see on this daily chart that the price went up here into this box a little bit. So this is a good sell opportunity at this very moment to go short regarding this euro versus Canadian dollar pair. So don't get scared if the euro even gets a little bit stronger into this box, because this is the supply zone. So every price is within this box is good selling opportunity, and you need to get some ice in your stomach and be cool and believe in yourself in this trade to go short. So I have actually take a lot of contracts going short here, but you cannot see it on my chart because I have not shown you this, because looks very messy, because I want to show you a clean chart. So you cannot see my sell contracts here, but I have sold heavy here today when the price went into this weekly supply box here. We can see on the 4-hour chart, it's a sideways market here, very choppy. And the daily chart, I also want to mention a very important factor here, that on this daily chart, this box you can see here, I have marked in an inside bar pattern strategy here. This is the mother bar. I have marked the top of the mother bar went up here, the wick here, and this is the lower wick, the tail here, and the tail top here, and the tail bottom here. And then you can see many days here of inside bars here. 1, 2, 3, 4, 5, 6, 7, 8 inside bars, no action here. And the 9th day, the price suddenly moved and dropped below the mother bar here. But then, as usual, when it comes to Forex trading, it's very tricky and volatile sometimes. So the buyers stepped in here, the banks, of course, because they want to trick you. Amateur trader thinks when the price go below this mother bar, I mean, experienced traders like me, we're using this inside bar strategy very often. But of course, I know when the price go below this mother bar here, this daily mother bar, I know for 95% of the time that it's a trick. You cannot believe that the price will go any further on the downside and drops more than this. This is just a trick. It's the second and the third drop that you could trust. So first of all, we must look and anticipate a daily close below this box, below this former previous low, close at 1.438 level. So we must see that the daily close is here, or most likely at this range, at least below this previous low, then we can see and anticipate a further drop here, a trend reversal. Let's have a look on the Kiwi dollar versus Canadian dollar. This is the weekly chart, and very important to spot is that this is very interesting to see. Every few traders that are more experienced can see this now. What is very special? Well, we have a massive evening pattern here, evening star pattern. An evening star pattern contains of three candlestick bars, 1, 2, and 3. The first candlestick bars in this case must be bullish, which it is. This is very bullish. The second candlestick bar shall be and should be a doji, and this is a very beautiful doji. You can see a very small, no body at all. It's very, the buyers and sellers are in even struggle here. And the third candlestick bars must be red and closes strong on the downside, which you can see here. It's actually the weekly close last week was actually below the opening of the first candlestick bar here. So this is an evening star pattern, which is a very strong trend reversal pattern. So I can show you a trick where you could expect how far it should go down, so to speak. Where is the first major demand level? I can show you a trick how to spot that. This is very advanced now for you, but very easy to understand. I mark out the very top of this doji, which is here. And then I marked out the very bottom of this third. This is 1 second. This is the third candlestick bar. It is evening star pattern formation. So this is the bottom here, and this is the very top, these 2 weeks. So I place it like this here, below the very bottom of this weekly red close bar here. So the price rotates up here and should reach this level. So here is a major demand zone where you could take your profits. Okay, a short recap. You mark out the top of this wick of this doji to the bottom of this red candlestick bar here. Okay, I place it here. This is the top of the doji, and this is the bottom of the second bar. And I place it exactly below the lowest point here of this wick. So the price most likely will return here to end of this box at 0.82. In addition, 0.82 is also a so-called round number. So the banks and the large players and elephants on the market usually look at these levels, these round numbers, like in this case 0.82 or 0.81 and 0.80. You get the picture. So that was the tips. So take profit level should be like 0.8211 or 0.82 here is your take profit level. And we can expect that. Let's choose this daily chart here. This is today. We can expect that the price should reach next week, let's say in January the 2nd, the price should reach minimum this level, 0.866, or let's say, yes, 0.867. Why? Well, because this is the floor from this mother bar here. As you can see here, that this is an inside bar here, and you are looking at the daily chart. This is the inside bar, and this is the mother bar. And then you can see the third day, the price went above this mother bar. It was a fake, it was a bull trap and went down. Banks was not happy. They want to manipulate traders more and go for more stop loss hunting. So they pushed the price all the way up here on the roof of my weekly supply zone that I have drawn before. So it reached exactly here at the 0.8818 level. And then we could see a downtrend here. So this is typical. The banks go for liquidity. They want to take the stop losses out here because here are a lot of stop losses for all those people and traders who take short positions. So the banks want to take your money. When they have your money, they take the price down. So this price should reach this floor, the very bottom of this mother bar here. Rotate up here to this level, and then down, or up to this level. This is also a supply zone, a minor supply zone. I can show you. You see the wick here? I do like this. I have marked the wick here. So this box is also a supply zone. So I think the price here when it comes to the Kiwi dollar versus Canadian dollar will in the beginning of January continue up to 0.866 level or into this box here, like 0.869 level or 0.87. So you can look for this selling opportunity here. Okay, I hope you liked my video, and I hope and wish that you have a very happy new year. And I would also appreciate if you could click the subscriber list and also click the thumbs up for this video, and to support me and to give you and provide you all of this material for free, helping you to become a successful trader. Okay, take care, and see you soon again next year. Bye for now.